Hello class, my name is Jancy John. My capstone project is Regulated FinTech, an oxymoron or inevitable. If we look at the financial technology innovation space, we would see that the demand and supply side is really strong with demanding customers, with evolving and dynamic technology, and the financial regulations. Now, these financial regulations provided by our regulators play a very important role in this equation because they bring in the support that's needed from a control perspective to ensure that each party is kept honest. More importantly, it also provides some much needed consumer protection and financial stability for our economy. Now, before we go into what are the kind of regulations, what makes them stronger, what are the solutions, let's look at why they are much needed. And that is because it is really growing at a super fast pace. This is corroborated by Accenture's research analysis, where the global fintech footprint is being shown by region. And the trajectory is really promising with a year-on-year growth. In fact, 2018 recording about 18.5% growth in the number of deals and total funding increased by 107%. While this 107% staggering growth is inclusive of the $14 billion and financial deal in Q2 of 2018, but nonetheless, the story is really impressive. Let's tie this with E&Y's Global FinTech Adoption Index of 2019. The Global Consumer Index is sitting pretty at 64% and Global SME Index is at about 25%. Now, these promising figures are primarily because the financial products and services that are there in the market are not just being disrupted by FinTech, but the financial challenges are also bringing in new propositions into the space. So this is a very enriched and a happening space. So if you look at the tabular view, you can see a lot of line items which are in light gray. Now, these are the items that are new or fresh and are actually adding more dimension to the growth of FinTech in the industry. Now, as a regulator, there are two sides of the coin that you are always toying with, and one needs to strike a balance between the need to provide your clients and your consumers financial products and services that are efficient and effective. But at the same time, as a regulator, you're worried that your regulations are not very restrictive and complex, and the cost of compliance is not stifling the new entrants into the market. As a regulator, you are welcoming the advantages that big data analytics, artificial intelligence, and machine learning bring to the table. But you are also taking cognizance of the risks that come alongside with respect to data, privacy concerns, or the lack of understanding of the emerging risk while we use such advanced tools and technology. As a regulator, one would also need to understand what is the type of market that you're operating in. Is it a one that has a lot of prominent players and they dominate the market? There's practically no competition, or is it a place where there is no large player and it has very heavy competition with many players? So you need to kind of balance your regulations out to kind of suit the circumstances in which you are operating or your jurisdiction. So in effect, you cannot, as a regulator, let go of your risk sensitive lens. At the same time, need to grow the financial inclusion, the infrastructure investment that you're planning, and grow and support the small businesses. Now, with these larger questions in mind, we will shift our focus to US. Now, when it comes to US, it's not just one or two, but multiple regulatory authorities that are responsible for financial sector industry in US. Now, this causes a lot of conflict because there are multiple rules that one needs to refer to when the fintech companies are expanding their horizons, and it becomes really confusing and conflicting, to say the least. And the other thing that the regulators in US are toying with is a balance between three elements. Now, this is not something that's very specific to US, but across the board, irrespective of the country, is that they would want to have a balance between protecting consumers, fostering innovation, and providing clear, simple, succinct, easy to follow rules. But more often than not, the regulators find themselves fulfilling only one or two of these requirements. And getting all three correct or balanced out is almost becoming a utopian stage. So how do they really do that? For them to achieve this, the regulators have to understand the macro level strategy. And to form that macro level strategy, they need to kind of break down the risks that are there in each of the baskets, be it consumers, the incumbents or startups, or the economy or the financial stability related elements. And while they understand the specific nuances of these risks, they need to then tie it back to the regulatory parameter that they will set to such risks and attestations of those risks. Understand what are the specific customer protection plans that they will build in to enhance the protection, security, and privacy of the customers. They would also need to bring in a strong governance model for the incumbents and startups, such that they understand what is risk management and work in an operational framework which is resilient to such risk threats. For example, if there's a product or service they would wish to launch, they need to understand what is the inherent risk, what are the controls they will put in play, and what is the residual risk. Based on the residual risk, what is the risk rating of the product? And based on the risk rating, what's the takeability of the product in the market? Now, all of this has to come together with the regulations bringing in the clarity to understand these aspects. Now, when it comes to economic and financial stability elements, the regulator needs to understand and gather a lot of information, analyze it deeply, and then through continuous monitoring, get to the specific elements which need intervention, and then step in to provide the support that is needed at an economic level and ensure that the financial stability is not at risk. Let's go back to US and look at what are the solutions that are already at play, because it is important to understand where we are standing, and then from there we then build on further solutions to make the market more secure in this dynamic fintech space. Now, what's working well? Number one, the innovation hubs and sandboxes. These are giving a lot of free field to the innovators to try and test their products and services without the fear of punitive action or legislative concerns. Second, we spoke about multiple regulatory authorities that are at play in US. Now, some of them have come together to form a communication bridge such that they can share information and data, and they can take that back to then tweak their own respective regulations. Third thing that is very powerful is the licensing element. Now, licensing is something that gives a lot of confidence to the innovators. At the same time, gives a whole lot of comfort to the customers as well, because it tells them that the innovators and their products and services have checked all the boxes when it comes to the regulatory requirements. It has met the prerequisites and is backed and supported by the government or the regulatory authority. Now, understanding what's working well, there are a few recommendations that I have on the table which will make the proposition more viable. It will make the environment stronger than where it is now. The first recommendation is that as a regulator, one needs to upskill and improve the knowledge levels and expertise. And this can happen by effective use of the communication bridge. Bring in the information and funnel that down to identify the changes that need to be made effectively into the regulatory structure, into the assumptions that we are considering for both market participants as well as the practices that are in place. Now, this recommendation works on the assumption that the communication bridge that has been set up is mature, is fully functional, and has meaningful information coming out of it. But if it is not, then the only way you can really make sense out of the information that's coming through or add more textual value to it is by adding SME knowledge from the fintech space. Now, the SMEs in the fintech space are the closest to the detail and hence can identify the weak links in the regulations and allow the regulators to ensure that these regulations are stronger at the nascent stage itself. The second recommendation is to apply RegTech and SupTech. Now, RegTech is primarily from an innovators or a startup's perspective, where they're applying technology to showcase how they are compliant to the various regulatory requirements. SupTech is when the regulators play their supervisory role and they apply technology support to run independent checks to understand how the incumbents and startups are complying with or without the RegTech in place. Now, while this is great, it is not very easy to implement because it is intensive on advanced technology and of course brings in a lot of budget drain as well. The third recommendation is to kind of build the regulations around the premise of quality, predictability, and sustainability. Now, the baseline requirement is that you have qualitative guidelines. While you have the qualitative guidelines, they can only be effective if they can predictably provide a view of what could potentially go wrong. Now, if that is something that can be identified by applying the nuances of the regulation, it gives the advantage or the edge to the innovator to plug the issues before they come through. And through continuous monitoring, of course, this will become a far more refined and strengthened process. With quality and predictability being in place, sustainability is a natural outcome and it will definitely set the innovators and the regulators up for success, and it will provide a good foundation to the regulatory framework. This again is dependent on intensive and advanced system and expertise. And more often we've seen that the startups kind of crumble under the compliance requirements and they try and boil the ocean. So what is required is the regulators provide clarity to the innovators as to what are the top priorities that they should be focused on when they are planning their control mechanism to ensure that quality, predictability, and sustainability is achieved. Moving on, let's look at the next recommendation, which is a cue from the banking segment, which is the grievance redressal cell. Now, this provides an avenue for both customers and innovators to provide their concerns. And with this information, we can filter down the key elements that concern the participants, and hence what are the kind of tweaks that we can bring to the regulations. Now, this is a very labor intensive and time consuming exercise because you really need to filter down, remove all the garbage, and pick up only the relevant information which can then feed into the regulations of the networks that can make the difference. So this is something that the viability needs to kind of be tested in and then be applied. But if applied successfully, it will definitely bring in a lot of support to the regulations. The last recommendation that I have is flexibility, speed, and innovation. And now these are elements that you generally resonate with fintech, but if you're able to apply these elements to the regulations, then we definitely would have regulations which are very advanced, and they would definitely be able to catch up with the rapidly changing environment in the fintech space. Now, one of the elements that can be tried in this recommendation is independent hackathons, where you bring in smart minds to break into or try and break into the algorithms, black boxes, and try and understand what the vulnerabilities are. Now, this is definitely helpful because you can understand your vulnerabilities, try and fix them in time. But the downside will be, what if you're not having the solution as fast as you identify your problem, which means that you will have this gaping hole sitting in the fabric of your system, which can then be used by miscreants to cause more problems in future. So these are the problems, the solutions, as well as the additional elements that can be made to kind of strengthen the solutions that have been offered through these particular 5 recommendations. Now, in summary, regulated fintech is not a concept. It is not an oxymoron. It is definitely a reality. It's inevitable, it's here and now, and it must be implemented in the appropriate manner. Now, how does one do that? There has to be an end-to-end clear framework with right tools. Regulators need to build on their expertise and apply that on ground, do a detailed gap analysis to kind of understand and strengthen their regulations, apply RegTech and SupTech, which will allow them to kind of really bring in that control and support system which is much needed, and be able to continuously learn and monitor and improve the regulations to kind of strengthen the environment and make it a more secure environment, so to say. While these are labor, time and cost intensive, but these are definitely going to be helpful to improve and set fintech up for success in future. So these are the elements that have been recommended and how we can make them happen. And that's all from me. Thank you so much.